Today I'm going to talk about two terms I get asked a lot about: gap and craps and buy the rumor, sell the news. Take notes! What's up, Tim Sykes, millionaire mentor and trader, here answering your questions. I have two common patterns to teach you about today. They're a little counterintuitive, but if you understand why and how they work, then you can be prepared, which too many, frankly, people are not prepared. 90% of traders lose because they just think the stock market is simple. They're just buying good companies. Oh, if a company has good news, the stock should go up. Let me buy it and wait for the good news and then the stock should go up. If it was that simple, 90% of traders would not lose, okay? 70% of investors fail to beat the S&P 500 every single year. The S&P 500, just so you understand, is the 500 biggest companies in the US. It goes up a lousy 8 to 10% per year. So the vast majority of traders lose, and the vast majority of investors can't even fucking make 10% per year. Why is this game so hard? It's because it's not an exact science. And I'm going to give you two terms right now. One, gap and crap. Two, buy the rumor, sell the news. These two little things matter greatly. And you just have to be prepared ahead of time. That's why I'm making this video. So what is a gap and crap? A gap in the chart is, if you look at stock charts, like a stock might be going up every day or down a little every day, and it creates a pattern. It creates an uptrend or a downtrend. But sometimes there's good news overnight, and there's a gap in the chart. Let's say the stock closed at $8, and then because the company announces good news, the stock gaps up to $10. There's a gap in the chart of $2 a share. Or there might be a gap down. What if a company has bad news? Stock is trading at $6. They have some really bad news, and it opens down at $4. There's a gap in the chart. That's a gap down. Right now with gap and craps, I want to talk about gap ups. When there's good news and everyone's all excited about the good news, but then the stock craps out. The stock might open up $2 a share, there's a gap in the chart, but then it comes right back down. Why is that? Why does the stock go down even when there's good news? Because sometimes good news is already priced in. Sometimes everyone's all excited about it, but people already knew about it. Like sometimes companies say, hey, we're going to pre-announce really good earnings on October 24th. And October 24th comes around, they have the good earnings, but they already pre-announced it, so people knew that it was coming. Or they might be debuting a new product with a big company coming out in a few days or weeks. They already know about it. Or, weed might be legalized on a certain day in a certain country. Everybody already knows about it. So buy the rumor, buy in anticipation of the good news, but for me, I don't actually like being there when the good news is announced because a lot of the run-up is oftentimes ahead of time. And so you get these gap and craps. This leads me to my next little phrase: buy the rumor, sell the news. If you know that there's an upcoming catalyst, if there's some upcoming news event, you can buy the stock in anticipation of it, because a lot of people don't realize that when the good news is out, the stock can drop. I've seen companies, biotechs, that announce FDA approval and the stock is down 20 or 30%. And I get messages, oh, penny stocks are so crazy, stock market is so unpredictable, there was good news and the stock is down, fuck you, fuck penny stocks. No, fuck you and your lack of research. Fuck you and your lack of understanding and how the game works. Maybe everybody already anticipated FDA approval. Companies talk, management talks, okay? I'm not saying it's like insider information, I'm just saying there's expectations. A company might report good earnings, but maybe somebody had better expectations. A company might say, wow, we're making $2 a share in earnings. Maybe somebody expected $2.40 a share, okay? It's not as simple, it's not black and white. This isn't the casino where you put all your money on red and you double your money or lose all your money. There's different shades in between, and I would encourage you, A, not to try to predict earnings, because you might get good earnings and then on the conference call the CEO might say something bad and the stock will drop. You might anticipate bad earnings and then the CEO might say something good on the conference call. You don't know what's going to happen between companies reporting the news, how the company actually announces the news, and then people's reaction to the news. There's three variables. It's not just good or bad. And if you understand that there's multiple variables that are unpredictable, you just want to avoid that. For me, I like waiting to see the reaction first. If a company reports good earnings, well then the market should reward it. It shouldn't be a gap and crap, it should be a gap up, and then hopefully I'm gonna buy the stock when it breaks the day high after the gap up. That tells me that the market loves the earnings or loves the news or whatever the news is because it had a chance to sell off and it doesn't sell off. Or buy the rumor and sell the news. So you buy the stock in anticipation of the good news, and then maybe a day or 2 days before the news is going to be announced, you get out and you do nothing with it and you take your profits, and then you watch all the schmucks who go down with the ship and you wave at them and you say, you guys didn't study, you don't deserve any money. Leave a comment below this video, let me know what you think. Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.